Helps if I turn the microphone on. Are you about to make this simple mistake I see beginner traders make all the time when trading cryptocurrency? Watching the Bitcoin chart skyrocket? Stay tuned for today's breaking Bitcoin market update. Welcome back to the show, ladies and gentlemen. We've got a fantastic show for you guys today. This is a pretty urgent and very timely video because it is at these moments when price has been soaring or when price is crashing, the traders tend to make the most common mistakes that I see traders make. It's so but that's why I'm here. We're here, Bear Market Support Group, Cryptocurrency Bull Market 2023, see what we can do. But unfortunately, we're still in the bear market. We're going to start off, as we always do, by breaking down current market structure, looking at how we got to where we are right now and where we're likely to go from there. Based on that information, we're going to deduce what are our opportunities right now, both long-term, short-term, and then intraday. So stay tuned. You guys don't want to miss this. First, before we get started, as always, if you guys like the content, you guys can support us by simply clicking the like button, subscribing if you haven't already. Notifications are always great. And if you guys are interested in becoming a better trader, make sure to go check out our new free guide. Not our new free guide, our $7 guide, how to succeed with the cryptocurrency trading. The free guide, the free guide is 5mistakes.crackingcryptocurrency.com. Anyways, we're going to talk about mistakes that trigger. Complete system failure. Jesus. Okay, I get it. All right. Don't hit the desk. Okay, geez. Anyways, let's start off as we are wont to do with the widescreen, starting off on the weekly time frame, breaking down how we got to where we are. We're going to go ahead and hide the lines for right now because that's not germane to what we want to talk about, as we will begin with the weekly. As you guys know, I've been talking about this relatively important level, the Tenkan-san leading line and the weekly exponential moving average period of 21, the 21 WEMA, for quite a while now, especially for the last several days as we've been ramping up to it. Again, I just want to point out how decisive that Tenkan-san, this is the blue line on my chart. We'll just highlight that. We'll highlight how the blue line on my chart, the Tenkan-san leading line, has been so decisive in rejecting cryptocurrency price action since we crossed it and really cemented the reality of the bear market. And this is just really cool. It's really powerful and important to see a simple yet robust technical indicator strategy like the Ichimoku. So to be clear, the Ichimoku is an indicator, but based on its multiple components, you can build a fully fledged trading system. I have a full video here on YouTube about how to use the Ichimoku to build objective strategies. Definitely go recommend checking that out. But notice that this is the weekly time frame. Notice that as Bitcoin breached down below the Tenkan-san, we were completely unable to get back above it. And price was unable to rise in any significant fashion. And every single price increase we've seen prior to potentially this moment has been a weak bear market rally. Descending into the Kumo cloud, driving up, getting rejected by the Tenkan-san, long pronounced max pain period, not max pain, but the most painful part to sit through of the bear market. And now we're in that kind of grinding max pain period, swatted down right before the news of the FTX collapse by the Tenkan-san again. And yet, here we find ourselves one more time. Will we blast through this time? Time will tell. However, this is, of course, since we are at a level of resistance, this is, as always, a good opportunity and a good strategic moment to begin looking to take short exposure on the cryptocurrency markets, using Bitcoin as our market mover here, as our proxy to determine what the broader market is likely to do. Okay. And in addition to the Tenkan-san leading line, we also have that confluence with the weekly 21 exponential moving average, okay? That has also been not as decisive as the Tenkan-san. You can see we actually broached above it, but it has been very informative of confirming the bearish market regime that we are in. So the current market regime is still bearish. Nothing has changed based on that information. However, we have several opportunities here. So weekly current weekly regime is, of course, bearish. What is the trend or the opportunity within that market regime? currently one of consolidation, show range trading strategies have been performing quite well up until the last week when we've had this nice explosive movement from Bitcoin, which has really been favoring trend following traders, particularly on the slightly lower timeframes. Okay, so let's, based on the fact that the current market regime is bearish, are we in a reversal situation? Do we have an opportunity where price seems to be overextended and it is not in our favor to be trading necessarily currently dominantly in the dominant direction of the market, of the current dominant direction of the market, which is bearish, or to the downside? Do we have an opportunity to be contrary? Do we have an opportunity to see exhaustion in the current dominant direction and trade contrary, in this case, to the upside? Well, I would say that we do. So if we switch to the reversal system, we can actually see, and I've been pointing this out for a while now, that we are printing regular bullish divergence on the weekly time frame. Pick whatever momentum oscillator you like, but it's going to look the same. RSI, stochastic RSI, wave trend oscillator, which is what I'm using here, or one of our proprietary indicators like Minx or the time transformation indicator, which we use in most of our automated strategies. They will all tell you the same thing. Regular bearish divergence following a period of the cryptocurrency markets where we've already experienced a mass bleed out. And now this long, slow grind showing significant seller exhaustion. We haven't been able to make a lot of momentum to the downside, and the time is ripe. Think about it. Even if we are going to descend to lower prices of 12,000, 13,000, which does certainly seem logical, we're definitely, the individuals who are currently holding and are willing to sell, they don't just desire to sell at any price. It's in their favor if the markets can rise. If the markets can rise and they can get exit liquidity before a final ultimate collapse. So if you're of the opinion that we are going to be experiencing this massive, catastrophic, everything bubble that will take everything down to the ground, then you shouldn't be always, you can definitely scream for the hills and scream for the end of the world all you want. It could possibly happen, right? I'm right here along with you guys, okay? But you have to look for your moments. And if that is really going to be the future that we see unfold in front of us, even in that scenario, we need to see prices rise so that there can be an exit liquidity situation. So the current bastion or the current tranche of market makers can exit their positions and pass that buck on to the next generation of Bitcoin hodlers, as we would say. So, I'm feeling good today. I'm feeling good today, guys. You guys feeling good? Do a quick shout out in the chat. We've got Ron Legato as always. Yes to crypto. XRP dopamine. Woohoo. Man, liking it. Emo Zabi, what's going on, my brother? One more pop. We will see eyes on the chart. So let's talk about that. All right. So we've determined that the overall regime or current trend is bearish. We've also been able to determine that despite that, we do seem to be in an area of seller exhaustion, and we are printing technical signs that there is a high conviction play for short-term upside. So that's what we're currently playing. Short-term upside. Where could we visit on short-term upside? Well, in yesterday's mentoring session for our trading and investment group, a member who I'm becoming quite proud of, he's becoming quite a good analyst in his own right. He pointed out the exponential moving average or the simple moving average period of 200 on the weekly time frame. The WESMA, if we would, the WESMA, weekly simple moving average 200. Powerful technical indicator for traditional investors to identify what the current regime is. Are we bearish or bullish? So a movement all the way up to 24,500, give or take, ish, would be right in line with this previous lower high that we established back in August of 2022. Would also be in line with where our 200 WESMA is. Very logical area to see price retrace, exit liquidity. People would get FOMO'd, frothy. Oh, Bitcoin bull market's back, 20,000 and above, baby. And then drop the bottom out, 12, 13,000. Very logical conclusion. Very good story. I like it. Let's move on, shall we? Okay, so those are our key areas. Let's now zoom down to the daily because we've had quite a significant movement out of price. So let's stay in our trending status here. We've successfully broken above the 21 or shorter term time frame exponential moving averages, as well as both the Tenkan-san and Kijun-san leading lines of the Ichimoku cloud. The 55 exponential moving average, none of those were able to stop us, and we even burst into the cloud, setting up this edge-to-edge trade. Now, notice that we've got our simple moving average period of 200 on the daily time frame, as well as the upper boundary of the Kumo cloud right here. And this is all in line with that $19,100 price target that I've been talking about. And wouldn't you know it, we absolutely struck that, and that's where we retreated. So again, I'm not here to self-gratify or self-glorify, but this is literally the price point where I said this would be my target, and from there we would want to look to potentially short. That is exactly what I said yesterday. And where did we go? 19,000. What's the high of today's daily candle? 19,117. It's almost like technical analysis works, ladies and gentlemen. Again, it's fun when predictions come. I don't want to self-glorify. I've been wrong plenty of times. But again, just pointing that out there, guys. Go back and watch yesterday's video for ye non-believers in the crowd. So 19,100. Once we, and also something very significant has happened. What has happened? We have now broken, for the first time in forever, a previous high, a lower high. Now, again, right in line with Alessio, this one isn't super important. This one isn't super important because it's kind of a consolidation range high, and we broke that. Okay, yay, so what? We would want to start getting excited around 21,000 typically, but then again, we also have to keep in mind kind of that narrative of price getting just high enough to get us frothy and FOMOing in before dropping us back down for the ultimate bottom. If, and that's only if, this everything bubble is really going to happen and we're really going to continue to see chaos and turmoil in the financial markets. This could absolutely be the bottom. Everybody feels that we're going to definitely go lower. That's a logical narrative. I have to talk about it. I've plotted it out. The TA says it could go that way. But every moment in the market is unique. There's no reason why this is not the bottom right now, why we are not experiencing right now, this moment, the potential start of the next bull market. We could drive ourselves crazy speculating on which way price could go. Up, down, left, right, or sideways. That's not the point of trading. That's not the point of technical analysis. The point is to look at these levels, to objectively ascertain where profitable opportunities arise, and then be prepared and disciplined by scanning every day to take action in those areas with proper risk management, such that if we are right, we make more money, and such that if we are wrong, the loss is not a blowout to our account. And then guess what, guys? You go do that 10,000 more times. That's trading. That's how you do it. That's simple. Okay, back, split. I know, man, $17 off. I got to tighten that way up, man. I'm sorry. I am so sorry for being so sloppy, guys. All right. Let's get back down to that daily time frame. I do apologize. We drifted a little bit there. Daily time frame broken in. We've kind of completed this edge-to-edge trade of the Kumo cloud. Now, let's switch to our reversal system and see if we are finally overextended. Obviously, we blasted through this channel as if it wasn't even there. And I would expect two things here. I would expect, because we have faked this channel out, which again, you guys know, I don't put too much emphasis on price patterns, but they're there, so we'll talk about them. And it is something that other traders are watching, so it's important to know about it. So we've taken out a previous high, we've faked out this price channel, and we have now entered into the mildly overbought territory on Bitcoin. Now, Bitcoin and the cryptocurrency markets have been very sensitive during the bear market. Every time we've really even gotten close to being overbought, we've rejected almost immediately. So keep in mind that our high conviction play right now is playing that regular bullish divergence. So we've been in our weekly long position for almost a month now. I'm not going to sit here and brag about the average entry price because we certainly could have done better with that, but the direction is what's important. Okay. So that is going to last for several weeks, maybe several months, depending on how market conditions evolve and if that trade moves in our favor. We are now flat on the daily time frame. So as of today's daily candle, our trading strategy hit our final take profit for today's, or excuse me, for this this cycle that we were just in. So this bullish momentum breakout to the upside that we've currently experienced. Since we've now taken out a previous high, and since we're now slightly overbought, I would expect to see a slight pullback. Now, I could be wrong. The momentum could be so strong that it does continue to propel. And for that reason, I'm not doing anything with my weekly long position. The higher price goes, the more money I make, great. But this is a very good strategic place to finally, and you guys have noticed that I've held myself back with quite a lot of reserve, with the exception of one hourly short trade here right before the breakout. Okay, we were just playing the range. We went to the top of the range, looked for a short didn't happen. We broke out, we got long. That's how you trade. But now I do think that we're in a tactical place where you could take on a bit of short exposure. So let's go down to the intraday and let's break that down. I actually want to do this on the hourly, and then we'll actually go down to the 15-minute and talk as opportunities have arrived. So we do have our levels of support and resistance here now that we can see price on the hourly, and let's just expand this so we can see a little bit more clearly. So our current high price, high that we need to overcome to consider another potential breakout is 19,120. I would consider intraday support slightly down here below this spinning top candle, Darth Maul candle, at about 18,604. So that's an area that I'm targeting on this pullback, and actually slightly lower. I would like to see at least a retreat here to the previous, slightly above the previous high. The middle Bollinger Band's about 18,400, 18,500 is how I'd like to see this pullback play out. If we do see a pretty convincing buyback there, I'll start scaling back into a daily long. Well, actually, I won't be scaling into a daily long. I'll be waiting for a continuation signal from my pathways to profit objective strategy to be taking another daily long position. This was a daily pathways to profit signal trade. These are the signals that we provide all the members in our trading and investment group on a daily basis. And on the hourly time frame, I would be looking to play these kind of, as the volatility is quite high right now, looking to play these bips and bops of the market as we move, as I like to call them. The wavily wobblies, right? The ups and downs, the range, the sweeps. Just follow the liquidity, follow the volume. Again, and one thing to watch for here, guys, is this. You just got to watch for big candles. Okay. So if we look right here, this is a pretty good example, right? And it matters where the big candle is. Okay. So we've had a pump, and then we don't really have any convincing selling at the top, right? This isn't super convincing immediately following the pump. I mean, there is some, but honestly, you know, we've got a hanging gravestone doji, an inverted hammer candle, two squat dojis, and then we finally have a bearish candle. But this is a harami. It's not even 50% retrace of the bullish upside candle. So nothing significant there. And so price consolidates, drifts lazily upwards. Here's a scary one. But then we have a nice breakout. So movements like this can always fake people out. Heck, they'd fake me out. But this one's relatively clear to me. There's no immediate violent rejection following the pop. If you guys see what I mean, like we were trending upwards. We have this kind of blow off top, big candles, and then it stops moving upwards. And then we just can list lazily to the right. That's usually a sign of that we're going to get continuation. It's when you see a violent rejection at the top that you want to be like, whoa, that was somebody big who just unloaded. They're done. And the market turns around when the big players start unloading. That's how it works. So what's that game called? Like when everybody, musical chairs, sorry. So again, I could be mischaracterizing this, but this does look more significant than what we saw over here. So I don't necessarily think that the rally's over. And again, I could be wrong. We could just break out here. And if that does happen, I'll be looking to play that too. But currently, again, I've already positioned a little short here in this range, and I'll be looking to position more short on a sweep. Both of those are about 1% a risk trade for me, because again, now I'm trading contrary to what seems to be the current dominant direction, which is now up on this time frame. So if I'm trading in the opposite direction, I want to be trading with lower risk, because your probability of being wrong is higher. You need to reduce the impact of being wrong, either with a wider stop or with a smaller position size, or both. Generally recommend both. So that's what we got going on here on the hourly. Zooming down to the 15, what were the intraday opportunities that we really had today? Well, as today's bell rang at about 9:30 my time, we were just coming off of this kind of movement down, slightly higher low here on the 15-minute time frame. and then a pullback back up into the Bollinger Bands. Nice consolidation. I really like to see this stair stepping up and then breakout. Those always tend to be good. Here's the thing, guys. People really overcomplicate trading. But you can really simplify it, right? Like if you're looking at this chart and this is what you're seeing, and you're seeing like price just like breaking out and climbing to the upside. And then you're like, okay, back testing is great. And like looking at all these things in hindsight is awesome. But then when you're looking at the chart and there's no future and you actually have to make a decision, you tend to overcomplicate it and be like, well, what do I do? What do I do, Justin? Just first, I mean, it really helps if you do all the pre-work and you understand, okay, what is your trading strategy, right? Are you a trend following trader? Are we looking for reversals? Okay, because you got to pick one of those in the beginning. You can't do both. You'll drive yourself crazy trying to do both in the beginning. If you're right now, if you're not consistently profitable, and by consistently profitable, I mean putting like trading is paying you, right? Like every minute that you're not trading, it's costing you money. Okay. So trading's not a hobby. I mean, trading can be a hobby, sure, whatever, that's the wrong price word, but trading should be paying you. You should have the ability to, that if you wanted to, you should be able to be withdrawing money from your trading account on a regular basis. Every trading strategy is a little different. It's a little misleading to say like, oh, well, you can count on guaranteed monthly income. Like, like depends on the strategy, like depends on your team or what you're doing, what you're running. But in general, trading should be paying you. If trading is not paying you, then you're doing something wrong. Okay. And you can either continue to bash your head against the wall and lose the money, or you can go back to basics, stop doing all the bullshit that you probably shouldn't be doing. Pick one direction, trade in that direction. Pick one strategy, trade that strategy. You pick one thing, you optimize it until it makes you $1 million, and only then do you even think about touching something else. You do not want to be a jack of all trades, master of none. You want to be a master of something. A master of something. Not a master debater. Okay? All right. Let's switch it up for a little visual continuity here, guys. Consolidation, quite a bit of volatility here. Again, as the bell rang, slightly higher low, nice stair stepping up to a nice breakout. Again, when you're looking for breakouts, you just kind of you just really got to take essentially any signal, or pick a signal. Don't complicate it. Just, sometimes you're going to, if you're a breakout trader, and you buy a breakout, I mean, probably 5 out of 10 times, it's not going to be a breakout. Probably 7 out of 10 times, it's not going to be a breakout. And you just got to be okay with that. That's where risk management and stop losses come in. But breakout traders tend to have more losses than wins. And that's okay. That's just how it works. So nice consolidation, no signals here. And then we get this nice breakout and this kind of last, meat of the trade opportunity here. Again, not a full confirmation on this signal. My system wouldn't have gotten long on this on the 15. It would have gotten long here. Let's scroll back here. All right, here we go. Yeah, so about like 19,073. And obviously we would have hit that, but what would that have looked like in real time? Yeah, I mean, pretty easy TP there. So, and I mean, nothing as of sake right now, but these are pretty decent sell-offs. So I'm biased on the Meso timeframes for a pullback here, either to retest the top of this channel or maybe having nothing to do with the channel. It's just a bit of the FOMO and euphoria. And this nice, hitting that take profit level that I had said yesterday and then getting a pullback currently. It just seems pretty clear to me. So, all right, guys, that's about all I got for today. I do need to keep this brief. I worked longer than I promised my fam, and we've got to go do some activities. So in summary, let's wrap that up with a quick summary. What we've got going on today is we are still in a bearish weekly market regime. Inside of that market regime, we've been consolidating. And also inside of that regime of bearish consolidation, we have now come into an overextended area of the market where sellers do seem to be exhausted. And we've now printed technical regular bullish divergence. That regular bullish divergence is playing out, giving us high conviction short-term plays to the upside. And those targets might carry price as high as around $20,000 to $24,000 on BTC USDT. We've now ascended and completed the edge-to-edge Kumo trade. So on the daily time frame, I'm now risk off on my longs, currently playing short-term tactical opportunities to the short side for a pullback, or I will reevaluate. Game plan is that if I do see significant buybacks at significant areas of support, which I mentioned earlier in the stream, we will look to continue taking risk to the upside while playing volatility on the meso timeframes. Okay. All right, that's about all I got. Before we conclude, I do want to, of course, mention you guys can go on over to 5mistakes.crackingcryptocurrency.com, and you guys can get your free copy of my brand new guide where I cover the 5 most common mistakes that I see traders make and how to overcome them with actionable information and steps. So 5mistakes.crackingcryptocurrency.com. It's the first link down in the description. You can definitely check that out. And if you're interested in working with myself or our team throughout 2023 to grow and protect your wealth, to build automated trading strategies, to learn how to trade your own or create your own technical, objective, mechanical indicator-based trading strategy, lots of information down in the description to get involved. But whatever you do, make sure to get involved in our absolutely free Discord server, discord.crackingcryptocurrency.com. Link is in the description. I will be back tomorrow, guys. Same crypto channel, perhaps slightly different cryptocurrency time, but it's all around the afternoon here. Mountain Standard Time. Until then, trade safely, understand your strategy, risk management pays the bills, be kind to one another, tip your waitresses, and if you have any comments, questions, concerns, sarcastic remarks, hot stock tips, or death threats, leave them in the comment section below. I'll see you guys tomorrow. Cheers.